Hey everyone, Qualcomm's recently announced innovations for the semiconductor industry, including for vehicles and personal computers, are gaining a lot of investor interest in this semiconductor stock. In this video, I'll review those latest developments, compare the company's longer-term revenue, earnings per share, and operating profit margin expectations, and weigh them all against the company's valuation to determine if long-term investors should buy this semiconductor stock today. So let's take a look at the latest details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Qualcomm has been very pleased with their latest innovations. The CEO saying that we are excited about the launch of our Snapdragon X series solutions for personal computers that deliver leading performance, unmatched power efficiency, and personalized AI experiences. And given the recent failures of Intel and the headwinds we're hearing from Intel about their latest CPUs and the difficulties and the challenges they're having, it could be an opening for Qualcomm to gain market share in this rapidly evolving industry. Now, I say that because in 2020 and 2021, there was a lot of personal computers that were purchased and they need to be replaced anytime now. So the average age of a personal computer is 5 years. So if you bought a computer in 2020, 2025 is the prime window for replacement. Now, some people will use their computers for longer, so maybe 2026 is when they'll replace it. Regardless, Qualcomm puts itself in a position to gain market share in the personal computing industry right at the precise moment when the industry's growth will be faster than it's been over the last decade or more. So great timing here for Qualcomm in its innovation. Revenue in the latest quarter increased by 11% to $9.4 billion. Earnings before taxes increased by 30% to $2.279 billion. The area of fastest growth for Qualcomm is the automotive segment, which increased by 87% to $811 million. It's still a relatively small part of its business overall, generating a little more than 10% of the company's revenue. The handset segment increased by 12%, and that's still by far the largest segment for Qualcomm in an industry that's at maturity and it's not growing very quickly. So the automotive segment provides a huge opportunity for Qualcomm to increase revenue. And now the personal computing industry will be that incremental revenue growth driver for Qualcomm longer term. Looking ahead, management is forecasting revenue between $9.5 billion and $10.3 billion in the next quarter, or a midpoint of $9.9 billion in revenue. That would be sequential growth from the previous quarter, so management expects growth to continue, and I wouldn't be surprised if growth for this company accelerates in its fiscal year 2025, given those factors I mentioned earlier. So talking about the company's growth in the automotive segment, they secured more than 10 new design wins with global automakers during the quarter, including next generation digital cockpit, connectivity, and or ADS and autonomy. ADS and autonomy is for driverless car technology, which is rapidly evolving. Nearly every automaker is working on some form of driverless car technology. It might not be full-on driverless cars where you don't need to have a driver at the wheel, but every car company is working on some sort of driverless technology, whether it just be for parking assistance or adaptive cruise control, where it can do more without driver intervention. Nearly every automaker is working on this technology, and this technology requires greater computing power. That's where Qualcomm steps in. Their Snapdragon digital chassis continues to scale across virtually all automakers and is now a key asset for the automotive industry. So they grew this segment 87% year over year, and it wouldn't surprise me if this segment continues growing robustly over the next several quarters to the next several years as the automotive industry evolves from where it is today, where you have basically a lot of fancy cruise control or cruise control that could do a little more than what your typical driver is used to, and it progresses towards driverless car technology. It's not going to be a unlock all of a sudden where you go from non-driverless cars to fully automated cars, you're going to have incremental improvements along the way where a new feature is added. A car can do a little bit more. It can drive a little more by itself in different kinds of conditions, in tougher and tougher conditions, in more and more situations. And all of that is going to be positive for Qualcomm. And then talking about the Snapdragon X series for personal computers, you can see here all the design wins that Qualcomm secured with key manufacturing partners, including some of the largest like Dell, Microsoft, Acer, Lenovo, Samsung, which is a partner in the smartphone market as well, and HP. All of this will help Qualcomm gain market share in this massive industry, which might not be growing for the long term, but it is entering that replacement cycle I talked about earlier, and it's a massive industry. So even getting small market share in this massive industry will be a growth driver for Qualcomm, because this is a new category, a category it's not used to having a meaningful market share. Looking longer term, you can see Qualcomm's cash flow from operations has jumped to $11.3 billion in its fiscal year 2023, and that's up meaningfully from the lows of around $4 billion in its fiscal year 2019. Qualcomm stock is now trading at a forward price to earnings of 14.5. After having a good start to the year in 2024, the stock price and valuation have taken a dip here since June and July of 2024. I last updated my viewers on Qualcomm stock on June 18th, telling and informing investors I still thought the stock was a buy. I've had the stock rated as a buy all year long in 2024. And following the latest investor update from Qualcomm and looking at their prospects longer term, in fact, if you look over the next 5 years, the analysts on Wall Street that are following Qualcomm stock expect it will grow its earnings per share by 11% per year over the next 5 years. I think that's a slight underestimation. I would estimate that Qualcomm's earnings per share grows closer to 15% per year over the next 5 years. But even, let's say, between 11 and 15, that would be solid growth in earnings per share for a company the size of Qualcomm. So, in my opinion, given these latest prospects, I would reiterate my buy recommendation for Qualcomm stock. I still like this stock, and the valuation, I still think the stock is a buy. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.